Hi everyone, welcome back to the channel Commerce with Chaitanya. How are you all? I hope all are doing great. Coming to the topic, we are in admission of partner. So, in our previous class, we have finished fifth problem, I think. Yes. So, today we are going to start, okay, sixth problem. So, problems are very lengthy, so it will take time. So, without any late, I will read the problem. So, Vasu and Dasu are partners sharing profits and losses equally. Their balance sheet as on 31st March 2020 as under. So, coming to the liability side. So, liabilities are, okay, coming to the liability side, creditors 20,000, outstanding expenses 10,000, general reserve 20,000, capitals of Vasu and Dasu 1,20,000 and 10,000. Cash at bank is 15,000, sundry debtors 40,000, stock 80,000, furniture 10,000, machinery 50,000, buildings 70,000, profit and loss 5,000. So profit and loss given in asset side. So which we need to post in a capital account debit side. Okay. This is the loss. So they decided to admit Sonu from 1st April 2020 on the following conditions. So the new partner is Sonu. Vasu, Dasu and Sonu is a new partner. So Sonu has to pay 1,50,000 as capital for 1/4 share in future profits. So he is bringing 1,25,000 as a capital. So Sonu shall pay 30,000 as goodwill and machinery to be depreciated by 10% and buildings to be appreciated by 20%. Provide for bad debt at the rate of 6% on debtors. Pass necessary journal entries to give effect to the above and give opening balance sheet of Vasu, Dasu and Sonu. So in this problem also, like our previous problems, in this problem also they have given general reserve and profit and loss account, cash at bank and goodwill, revaluation values. First we'll distribute undistributed reserves and profits, losses, okay, goodwill to the old partners in old ratio. So first we'll prepare general reserve account. So put the heading general reserve. And this is credit side and this is debit side. Okay, particulars amount. So what is the value of general reserve? 20,000. So post it in a credit side. By balance brought down, 20,000 is the general reserve amount. So here old partners are sharing profit and loss in the ratio of 1:1, means equally 50-50%. So no need to calculate, okay, simply write down half of the amount to names Vasu capital account, to Vasu capital account, to Dasu capital account. So 10,000, 10,000, 1:1 ratio now. So equally they are sharing. So write down highest amount on two sides. So we distributed general reserve among old partners in old ratio, which is equal. Next, we'll prepare cash at bank, cash account. Cash account, particulars amount. This is the credit side and this is the debit side for this account. So what is the opening balance of cash? 15,000. So write down to balance brought down 15,000. Now capital, okay, brought by new partner 1,20,000. So New partner's capital is 1,25,000. So cash account data to new partner name is, what is the name of new partner? Sonu. Sonu is the new partner. So Sonu's capital account. Sonu's capital account amount is 1,25,000. Next to goodwill account. So you know the journal entries, cash account data to goodwill. So cash is coming into the business now. So we are preparing cash account data to goodwill account. Goodwill amount is 30,000. So now make the totals. What is the total? 1,25,000, 30, 40, 1,40,000, 1,70,000 is the balance carry down. By balance carry down. Write down the credit side 1,70,000. So write both sides 1,70,000. To balance brought down 1,70,000. This 1,70,000 will post in a asset side. Okay, cash account we prepared. Now we'll prepare profit and loss. Particulars amount. Loss is given. So what is the journal entry for loss? Okay, loss we need to distribute among partners. So Vasu capital account data to Dasu capital account data to profit and loss account. So we are crediting profit and loss account. So write down this side by names Vasu and Vasu capital account and by Dasu capital account. So 5,000 is the profit and loss, okay, amount. So this 5,000 we are going to distribute equally 2,500 and 2,500. So here by balance brought down, write down in the bracket loss 5,000. Otherwise, simply if you don't know the journal entry, you are confusing with the journal entry. Just this is in a right side. So post it in a left side as a balance brought down. Then distribute among partners. So now make the totals 5,000 and 5,000. So this is the profit and loss account. So loss we distributed to partners. Next, cash over, general reserve over, and profit and loss account also we finished. Now coming to the goodwill account. So we'll prepare goodwill account here only. So write down goodwill account, particulars amount, particulars amount. What is the value of goodwill? Value of goodwill is 30,000. Goodwill account data to Vasu and Dasu. Vasu capital account and to Dasu capital account. So what is the amount of goodwill? 30,000. So 15,000, 15,000. So equally we are sharing. So 15,000, 15,000. So by balance carry down 30,000. So close the account 30,000, 30,000. So this is the goodwill account. Next, revaluation account we are going to prepare. So put the heading revaluation account. Revaluation account, particulars amount, credit side, and this is a debit side. As you know that all depreciations debit side and appreciations credit side will show, okay, and liabilities vice versa. So first, machinery to be depreciated. So depreciation on depreciation on machinery. So I'm writing in a short form, okay, at the rate of 10%. What is the value of machinery here? 50,000. 50,000 means 10%. Okay, 5,000 is the depreciation value. Next, buildings to be appreciated by 20%. What is the value of building? 70,000 into 20%. 0, 0, 0, 0 cancel. 14. So 14,000 is the appreciation. So appreciations will show in a credit side. So appreciation on buildings. Appreciation on buildings is the 14,000. Next, provide for bad debts 6% on debtors. Debtors value is 40,000. So 40,000 on 40,000, 6% we are providing bad debts. 6%. Okay, 0, 0, 0, 0 cancel. 24, this 2 zeros. 2,400 is the bad debts. Bad debts 2,400. So only 3 adjustments are there. So now make a total of this. Highest amount 14,000 will post on both the sides. Next 7,400 means 600 is the, okay, 6,600 is the profit. So credit side is more than the debit side value. So profit is, okay, revaluation profit is 14,000 minus 7,400. So remaining 6,600. 6,600 is the profit, revaluation profit. So 6,600 is the revaluation profit. This profit we are going to distribute among old partners. Okay, 50-50. Vasu capital account and to Dasu capital account. So Vasu capital account and Dasu capital account. 6,600. Okay, 3,300 and 3,300 is the revaluation profit. Okay, so we have prepared general reserve account, cash account, profit and loss account, goodwill and revaluation account. Now remaining 2 accounts are left, which is capital accounts and balance sheet. So students, make a note of this two, revaluation account and goodwill. So I am going to rub these two to prepare capital account and balance sheet. Well, I'll write here revaluation is 3,300 each and goodwill 15,000 each. Yes, yes. So now we'll prepare capital accounts and balance sheet here. So first I will draw the format. Accounts. This is the credit side and this is the debit side. So now we'll write the capitals of old partners first. So Vasu and Dasu 1,20,000 and 1 lakh respectively. So write by balance brought down 1,20,000 and 1 lakh by bank account. What is the capital of new partner? Sonu 1,25,000. So then general reserve, okay, distributed general reserve, profit and loss, goodwill, revaluation will post. So general reserve is by general reserve account 10,000 respectively. So 10,000 and 10,000. Next, profit and loss. Okay, this is in a right side, so I am going to post this in a left side. So profit and loss account 2,500 and 2,500. This is a loss. So we are posting in a opposite side. If it is a profit, credit side. Loss, debit side. So next, okay, revaluation. By revaluation account, revaluation account is 3,300 each, and goodwill. Goodwill also we distributed among old partners. Okay, 15,000 each. So general reserve over P&L over. Okay. So now make the totals. 1,25,000. This is a new partner's capital. Write two sides. 1,25,000. Now make the totals. 1 lakh, 110, 125, 1,28,300. Yes, 1,28,300. 1,20,000, 1,30,000, 1,40,000, 1,48,300. So 1,48,300 is okay. Sonu's adjusted, Vasu adjusted capital, and Dasu capital is 1,28,300. So now write down. Okay, first we'll write both sides. 1,48,300, 1,28,300. So now balance carry down. So which amount we are going to carry down? This amount, but we need to deduct this loss. Loss is paid by old partners. So whether it is a loss or profit, so old partners need to bear that. Okay. So loss incurred by the firm is 5,000, which is we distributed among partners. So deduct from this total. So first 1,25,000, 28, 8,300 minus 2,500. So 1,25,000. So we'll calculate here 1,28,300 minus 2,500. 0, 0, 7, 13 అయితే 8, 7, 5, 1, 2. So 1,25,800. So this is the Dasu's adjusted capital. So 1,25,000 is the Sonu new capital. So now 1,48,300 means here also we will get 2,500. 1,45,800. Yes, 8,300 kada. So minus 2,500, 5,800. 1,45,800 is the balance amount. So now by balance brought down. So brought down this adjusted capital 1,45,800. Yes, and 1,25,800 and 1,25,000. Okay, this is the adjusted capital. So now we will prepare balance sheet. So draw the format balance sheet. So write down liabilities, amount, assets, amount. So now first we'll start with the liabilities. So creditors 20,000. So creditors are 20,000. Next, outstanding expenses. Outstanding expenses which are 10,000. Next, capitals. Coming to the capitals of Vasu, Dasu and Sonu. Okay, first we'll write Sonu 1,25,000. This is a new capital. Now adjusted capital is 1,25,800 and 1,45,800 is the Vasu adjusted capital. So liability side is over. Now coming to the asset side, cash at bank. Cash at bank. What is the cash balance? Okay, closing balance of cash is 1,70,000. Write down. And sundry debtors. Sundry debtors. Okay, sundry debtors are 40,000. So deduct bad debts. Deduct bad debts. What is the bad debts amount? So 6% means debtors 47. 2,400. So deduct 2,400. Yeah, 37,700 is the bad debts amount. Then coming to stock. So stock value is 80,000. So machinery, buildings. So stock value 80,000. So there is no adjustment. So write down 80,000. Next, furniture. So furniture value, okay, there is no adjustment. So furniture value 10,000. Write down 10,000. Next, machinery. Machinery value is 50,000. Machinery 10% means 5,000. So machinery is 50,000. Okay, deduct 5,000. So value is 45,000. So buildings. Buildings are appreciated. So building value is appreciated by, okay, building value is 70,000. First write down building value, then appreciation 20% means 14,000. Okay, this is a 84,000. I'll cross check. Okay, debtors we have posted, machinery, building. Okay, then. Okay, now make the totals. So liability side, make the total sign, type in a comment box. Okay. Okay, both the sides, not only liability side, liability and asset side, make the total fastly and type in a comment box. So now we'll do the calculation. Please see the calculation cheyadaniki. So this side, this is a 20,000, 30,000. Yes. So 2 I am adding 30,000. And this is 30,000 and 1,25,000, 1,25,000, 2,50,800. Yes, 2,50,800. This two I am adding. So 1,45,800. 1,45,800. So 2,50,800 here. So 2,50,800. So now make the totals 0, 0, 16, 6, 9, 10, 11, 12, 4,26,600 is on liability side. So now do the total on asset side. So first I will write this 4,26,600. We'll see whether our balance sheet get tallied or not. So okay, I will do total of asset here. So 1,70,000, 2,07,700. 2 lakhs, okay, 7,700, 2 lakhs 7,700. Okay, next these two, 80, 90, 90,000. Now this two, 8, 9, 10, 11, 12. 1,20,900. 1,20,000. 1,20,000. Sorry, 40. 1,29,000. So 1,29,000. So 600. Sorry, 37 600. 400 na. So the value is 600. So this is 600, 16, 9, 10, 11, 12. Yes, 4,26,600. So this is also tallied. Okay, this problem also we got this answer, 4,26,600. So by mistakenly I wrote here 7. So our balance sheet got tallied. So I'm happy. Are you? This is the sixth problem. I hope you like this video and subscribe to my channel for more videos. Thank you.